Hello, good morning, everyone, and welcome to our live trading session and morning market update for Thursday, November the 30th of 2017. This is George Papazov from TRADEPRO Academy. Today, we're going to talk about the all-important OPEC meeting, all right, and the 3 or 4 scenarios I think can go down and how you would trade them. And then we're going to look at Bitcoin as well and why it's selling off, and we're going to cap it off there, all right? That's pretty much the extent of what we're going to cover. If you guys have any questions, comments, please put it down below. Before I open up for today's morning market update, I want to say I'm really excited today to be presenting at the Investor Inspiration. I almost said innovation. That should be another conference. I'm presenting at the online conference of Investor Inspiration. Check it out, investorinspiration.com. But if you click the link on the description below, we'll actually bring you right there and you could sign up. It's a full day of events that will be presented by 6 speakers. I'm one of them, and I'm going to be talking about how to find stop losses of retail traders and how to profit while they're being hit. So that's going to be a really exciting presentation. I'm speaking at 2:45 p.m. Eastern time. There's a lot of speakers before me and some after me, so check it out, but click the link in the description before you do go check it out. It'll take you right there, and you can get a free pass courtesy of TRADEPRO Academy. All right, let's start with today's morning market update. In Asia, Japan's up 0.6%. Hong Kong's down 1.5%. So China and Hong Kong continue to see some downside pressure. They're not following to new all-time highs like U.S. equities are. Okay, so China's down 0.6%. India's down 1.4% as well. So really weak Asian session. In Europe at midday, London was up 1/3 of a percentage point. Paris was up 0.5%. And Frankfurt was up 0.8%. So European equities rallied after some Asian session weakness. So you got some long European traders that are priced into the current market. Very important to know that information and how to use it around 11:30 a.m. All right, futures here in the United States, Dow Jones is up 0.4%, S&P is up 1/3 of a percentage point, Nasdaq's up 0.3 as well. Crude oil is up 0.9%, and gold prices are just getting clobbered. In the last couple days, we've had a really big seller of gold right before the open on the U.S. trading at 9:30 a.m. And it looks like they hit the market a little bit earlier today. So they're really putting downside pressure. A lot of contracts are going through on the bid. Heavy selling in gold. Be careful. We think it's going to take out some of the lows if it doesn't hold the current support. All right. Bitcoin is down over 18% in the last day and a half. All right. It got hit quite a bit. And yesterday had a $2,000 swing in price and a lot of volatility. And I'm just hoping and begging, well, I wish that it was available to day trade because we would have made really good money. With Bitcoin, I tend to prefer to day trade it rather than to buy and hold it as an investor. I like to see volatility. I like to take advantage of it, but I like to be in cash overnight to avoid these rapid moves. Many traders and new investors tend to think that the more an asset moves, the better it is to hold it. And that's only true if it moves to the upside. But any supply and demand driven market has a balance of power. It's got a two-sided market. It can go up and it can go down to the same extent. So yes, the opportunity is greater on very volatile, fast upward moving markets, but the risk is also greater, especially when you're buying near a high. So today we're getting a little bit of a dip. What caused the dip in Bitcoin? Coinbase, really popular exchange, yesterday had a lot of issues with users logging in. They would log in and says your account does not exist. That's a scary thought if you're somebody who's got a crypto wallet or a Bitcoin wallet and you're storing these Bitcoins. A scary thought to sign in with your credentials and not see your money. But it's even scarier for it to tell you your account doesn't exist. There was some troubles like Coinbase, one of the biggest exchanges, and they said it was due to the rapid increase of transactions and demand. So that really started to spook out some of the investors. When you're getting a lot of retail money trading, that's still when it's hope. But when you get a lot of institutional money coming into the marketplace, the product really needs to be airtight, and institutional investors get scared quicker and sell much faster and are less patient than retail investors. All right, so that's what's happening here. Just when we were kind of attracting the institutional crowd, the big money, the professionally managed money, it started to run away because of this Coinbase era, and they sold heavy. So it's down 18%. It's trading into the $9,000 range now. I wouldn't be surprised to see it go into 8 and 7 as well. Bitcoin's volatile. So 18%. And in fact, after 20%, it's an official bear market in most assets. Not sure if that applies to Bitcoin, though, because Bitcoin's a little bit more volatile. All right, so 10-year Treasury yield is at 2.38% currently, and we had some initial jobless claims this morning along with personal income and outlays, and we have the Chicago PMI number today at 9:45 a.m. We have natural gas inventory at 10:30 in the morning, and most importantly, we have this OPEC meeting. All right, so let's talk about this OPEC meeting because I've broken it down for you guys into 4 simple scenarios that can happen and how to trade them. All right, so this is valuable information. So oil producers from the OPEC and non-OPEC commit. OPEC is meeting now, all right, at the moment. Russia is also part of the discussion, but they're not part of OPEC. The OPEC meeting is taking place in Vienna today, and it started at 9 a.m. So a lot of the ministers of foreign oil companies have arrived, and they're going to meet, and they're going to discuss one thing on the agenda. Should they extend production cuts? Currently, production cuts are set to expire at the end of March. And when we say production cuts, they've already cut their production. It's maintaining that low level of quota for their inventory. That basically means these nations have come together to agreement where they can't produce and sell more oil than the stipulated amount for their country. So they're sort of capped at what they could export and sell. And that controls supply, and it has given a lot of life and upside to the oil price. All right, so understanding what's happened so far, the meeting today is what is the fate of that production cut? Do they extend it or do they not? They're meeting to discuss the following. They're going to talk about whether or not to extend that production cut from the end of March of 2018 to the end of December of 2018. So what is currently priced into the market is a 9-month extension at the current quota rates. And that means that instead of going to the end of March, you're going to extend it to the end of December. That's what the market's priced in. That's why the oil market's been so bullish and excited over the last couple of weeks. Leading up to this, it's been driven on buying of hype. All right, there's a saying in the business that you buy the rumor and you sell the news. And I think because oil's rallied so much, even if we do get this scenario number 1, all right, so scenario number 1 would be a 9-month extension at the current quota. All right, that would normally be bullish, but I think a lot of the buyers who expected that outcome are already in the market. And that means when you're already long an asset, you're not a buyer, you're a seller waiting to happen. So be cautious of that. The base case scenario, yes, it's bullish, but I think if we just get a 9-month extension, it'll rally a little bit and then quick selling after the algorithms start to hit it. And traders who are in the trade are starting to cash out to take profit from weeks ago. So I think the base case is bearish, believe it or not. Right? Not many people will tell you that. You'll think, oh, well, production cut, that's good news. Market's going to go up. And you're the one that's going to buy it at the high, and then you're going to get sold off on institutional money. So be very cautious today. The second scenario is the most bullish scenario, but also less likely. It's a 9-month extension on production freezes or quotas. But at the same time, they also lower the amount of oil they're allowed to sell. It's a production drop. It's actually a cut of current quota, and it's an extension. If that happens, oil will pop 3, 4, 5% plus. It's going to rally a lot in a single session. That'll be very bullish because it's not expected. That's the second scenario will actually cause oil to continue to the upside because that scenario is not priced in. All right, that's scenario 2. Scenario number 3 is bearish on the market, and that's basically no 9-month extension. They could come to agreement. Russia might not agree with this. OPEC might not agree. There could be anything. This is a meeting of very high power individuals across countries that make the majority of the revenue from oil. They might agree to disagree. They might say, look, we've kept productions. We had a quota up until the end of March. Let's respect that. Let's let it go. Let's not do a 9-month extension, but I'll comply till the end of March. If that happens, oil's going to dump. Number 1, there's a lot of long traders stuck in this trade expecting the base case, and they just got surprised to the downside. In that scenario, I think the selling will start to intensify and it'll drop vertically. It'll be a horizontal drop in the magnitude of 5+% easily in a couple of minutes. All right, not a couple minutes, let's say a couple of hours. It'll be a very bearish trade, but that's not even the most bearish scenario. All right, scenario number 4 is actually the most bearish, and that's no 9-month extension. And there's a severe disagreement in the boardroom. And what happens is they just don't even decide to comply at all till the end of March. They're just like, you know what? This is a terrible idea. I don't like what you guys are saying. I'm cutting. One moment. I just got a squawk. They just agreed. 1 second. Let's see what oil's doing. I think they just hit an agreement. Well, I'll confirm that. I just heard a squawk. It's very important to have the news. That's why I listen to these news services in real time. That's why I have my headset on while I do these updates. I need to listen to news. So if that's the scenario, if they do agree, then that's scenario number 1. All right, that's the price in scenario. Look for weakness for oil. And then scenario 4, as I said, no 9-month extension. Everybody just disagrees and says, you know what? Not only do I not want to extend it, I want to pull out of the accord down to the end of March. And that's going to be super bearish. Very, very bearish scenario. Very unlikely at the same time as well. Here's the point I'm going to make, and I'm going to put it with you in a real world example that you need to know. This is very powerful information. This production cut, it's great for the price of oil, but the higher that the oil prices go, the less likely they are to agree on extensions for those cuts. Why is that? Think about this. Imagine you own a business selling, I don't know, anything, laptops, for example. You sell some kind of powerful laptop for graphic designers in the world, and that's your business. And all of a sudden, the price of these laptops increases by 50, 80, 100%, and you have a warehouse full of these laptops. What are you going to want to do? You're going to want to sell them. All right, you're not going to want to agree with your competitors to say, well, look, I'm not going to sell my laptops, because that's revenue that's waiting for you. That's market share. That's the reason you're in business. All right, and the higher that oil prices go, the less hesitancy, or the more hesitancy there's going to be on the behalf of oil ministers to continue those cuts, because there's lost revenue for them. And a lot of these countries, that's their single biggest import. They rely on that to finance all their operations throughout the government. They're not like the U.S. Treasury. They don't go out there and sell trillions of dollars of bills and auction them off. They have to produce real revenues, and that's by selling their oil, their merchandise, that's their goods. So always think on the behalf of a business owner. Will they want to sell? Absolutely. And I know there's every single country at this meeting right now wants to do nothing more than to leave the meeting and sell the crap out of their inventory. So that's why the higher the price goes up, the more the price goes up, the less likely it is for them to continue to agree and continue to bump out those production cuts. And they're in pretty, I looked at some stats, they're in about 96% compliance, meaning that every single oil producer that agreed has actually kept and stuck with the quota. And that's powerful stuff. All right, I hope that's given you a fair bit of info and helped you decide how to day trade this thing. There's gonna be a lot of opportunity today in the oil market. You have to follow oil today. It will pull equities up. It will push equities down. It will be the #1 thing to watch for the day. All right, at the end of the day, they're going to be talking about what happened about oil, not equity markets. So yes, pay attention to equity markets, but my main monitor today will most likely be oil. Look at gold as well. Gold's low and weak. You guys take care. Have a great day. I got to get to the trading room. We got to open it up, set some trading levels and some areas where we think we're going to get long. So check us out, the Investor Inspiration. Click the link below and sign up, and I'll see you there at 2:45. I got a really good presentation planned for you. Take care, guys. Have a great day, and I will see you tomorrow at 9 a.m. Tomorrow's Friday. I love Fridays. All right, all the best. Take care. Patented chair spin in 3, 2, 1. Goodbye, and have a great day. 0. All right, trade pros, let's do this. Let's queue up for oil. Let me just double check the news, because I do think they just announced a production cut extension to the end